And welcome to this special interaction with the management at Lupin. Vinita Gupta as well as Nilesh Gupta, both founders of Lupin, are with us, as well as the group CFO. Thank you so much for taking out time for us. Nilesh, let's start with you. What happened in the quarter? India business particularly did quite well. US surprised, that I'll ask Vinita. But first start with the India business.
Sure, yeah. So our India business has been going strong, and Q2 continued. The market grew at 15.4%. Our internal growth rate for Q2 is 17.4%. Acute, we outgrew the market. Chronic, we continue to outgrow the market. Just because the acute is growing faster than the chronic, on the backdrop of COVID treatment, the mix makes our growth does not look that great as we would like it to be, but we've always guided for 20-30% more than the market growth rate, and we firmly continue on that path. Quite pleased with how India is shaping up.
Right. Vinita, can you talk about the US business? 180 million plus in terms of a quarterly run rate. That gave a good number. Can you just talk to us about the pricing erosion as stabilization of the US business happens?
I'm not going to predict pricing erosion because every time we think that is behind us, there is more to come. But we expect, as we are seeing majority of our peers report as well, mid to high single-digit price erosion. But despite that, both on the back of our respiratory franchise, albuterol ramp up, Brovana ramp up, as well as our baseline product gains, our team has been able to deliver growth quarter after quarter. And we remain confident of continuing on the growth path in the US on the back of especially the new products, the respiratory franchise that I just mentioned, as well as strong base business.
Right. Ramesh is also with us. Ramesh, could you talk about the margins that came in probably 13%? That's not the normal at Lupin. What happened in the margins? Then we can talk about the way forward as well.
I don't know where the 13% actually comes from. Even at the start of this fiscal, we actually had guided for, in fact, last quarter call, we actually guided for a very tough quarter. If you recall, last quarter we finished at about 14.3%. This quarter, if you take away all those exceptional items, so to speak, it is 14.9%. There's of course the positive impact of R&D and of course employee benefit expenses, whilst there's of course a fall in gross margins as well as expenses increase in terms of SG&A, sales, promotion, travel, and the like. All of this put together, and if you take off those one-time items, which is essentially because of restructuring of our specialty sales force in America, we come to 14.9%, and this is in line with what we had guided for when it comes to EBITDA margins.
Right, so 14.9% maybe after a lot of adjustments, but there have been a lot of adjustments regarding US specialty, one-offs regarding some products, some discontinuation. Could you just tell us that how should you look at the quarter ahead? The numbers are starting to be so volatile, Nilesh and Ramesh, both of you all, if you could just come in, that what essentially is happening now. We have to look at a company like Lupin on a yearly basis rather than a quarterly basis.
No, I think that's not the way it is. So if you look at the whole of last year, we actually improved it. In the successive quarters, it went up to close to 18.8%. At the beginning of this year, also we were fairly optimistic, and after that, there were a few things which really happened. If you recall, in terms of the gross margins, famotidine competition crept in. We didn't expect two more competitors to come in, so that was one part of it. We also had moved away from, in fact, spot purchases or sales for albuterol into more long-term contracts, and as a result of that, we actually had, there was a lower realization. We also had the impact of FTS. Added to that, Q2, we also have the sales mix issues, plus in fact, increase in terms of raw material costs and all of that, which contribute to a slight decline in terms of gross margins. There's of course the accounting change in terms of the way we account for partner products as well. Our initiatives in terms of the way we want to actually bring down costs over time are still going on in terms of routes to synthesis, in terms of procurement excellence, a host of initiatives that we've taken when it comes to SG&A expenses, restructuring of what we said would be specialty, our new chemical entities and the like. We're still well on track on all of those. All of this will certainly bear fruit, and you would expect this to come through in possibly the next several quarters, so to speak. We're not going to give you a guidance about when we're going to get back to 20%, but for sure we will. It's professional pride all the way. In terms of the margins, we would expect, in fact, margins to certainly creep up For next quarter, for example, it will be at least a couple of percentage points higher, and the quarter thereafter also. And for sure, and over the next few quarters, and gradually as we move into the next fiscal, we would expect it to normalize to the levels that we should be in, which is the 20-odd%.
Ramesh captured it pretty well, but there's a clear glide path to getting to 18 and then 20%. We're not going to get there in the next 2 quarters. Obviously, we're going to build from where we are in Q2, so we'll get stronger numbers in Q3, Q4. I think one time it would happen, but we watch the company performance very closely, both at the certainly at the annual, but obviously at the quarterly as well. And we'd certainly like our stakeholders to do that as well.
Right. Vinita, let's talk about the US specialty business. There have been some changes as far as Solosec is concerned. So what's the way ahead for specialty? What's the way ahead for R&D and complex drugs?
So on the specialty front, we basically just reduced our focus on it completely. And with Solosec, our focus is non-personal promotion at this point, bringing down the burn that we were experiencing on the specialty front significantly. Likewise, we have actually pretty strong pipeline in women's health that we developed, which again, we are very confident of progressing the pipeline through creative funding partners and reducing that burn. So specialty will not be a burn for the company next fiscal year onwards, and we'll already start delivering savings through this restructuring from Q3 onwards. So that should definitely help drive EBITDA improvement. On the other fronts, on complex generics, very different stance. Obviously, it's a big part of a growth driver in the years to come. If you look at the current year and the growth that we experienced in the quarter, what we remain confident in the quarters to come. It is really a transition from our oral solid business to a combination of oral solids and increasingly complex generics with the inhalation products, albuterol and Brovana. And as we look at the next couple of years with additional inhalation products with Spiriva, Dulera, the pipeline that we have in place on the respiratory front, the biosimilars that we have the potential of bringing to market, pegfilgrastim filed. We are working on the Onpro biosimilar. We're working on ranibizumab, Eylea. We have the opportunity in the next couple of years to, from fiscal year 24 onwards, bring one biosimilar to the market every year. And then complex injectables, likewise, we've made significant progress across peptides as well as depot injectables with products now nearing filing stage. We have a second peptide product that's likely to be filed this quarter, plus have our first depot product in the clinic, and are supplementing our internal pipeline on the injectable front with partners, with the liposomal products through a partnership with Fordos, as well as other partnerships that are underway to expand our injectable portfolio. So we expect complex generics certainly to play a major role in the growth of the US business, as well as the generic business ex-US as well in the years to come.
Absolutely. Nilesh, when we just talk about India business, you did not have a lot of COVID-related drugs, and plus your drugs are more of, acute, some of the others which also require some special therapies. Are you seeing, pre-COVID levels coming back for the other businesses, ex the normal or the COVID business? Has that business resumption started?
Yeah. So it's business as usual as far as India is concerned, thankfully. As you know, we had a horrible second COVID wave. But we're back to pretty much normal levels as far as doctor attendance is concerned, as far as representative calls. Our average is back to well over 10, including a couple of digital calls. So it's there. The patient footfall is pretty good as well. I think there were a couple of states where, obviously there were spikes in COVID where patient footfall is a little bit lower. But I think we're back to normal. And fingers crossed, hopefully, we won't have a third COVID wave. If we have one, it'll be mild. I think now's the time to go back. I think it's a great opportunity in India because I think people care about health a lot more than they did before. So the entire, diagnosis, treatment, adherence, it's going to be, it's a pretty solid story going forward as far as healthcare is concerned, and certainly for pharmaceuticals at Lupin.
Right, sir. Thank you so much, gentlemen, and Vinita, for taking out time for us. Always good to chat to you.